Good morning, everyone. This is Marshall Giller bringing you the morning comment for October 24th. The question for the markets recently has been whether we face disaster or catastrophe. In the last couple of days, however, things have started to look a little better. The U.S. CPI for September reassured the markets that the U.S. isn't slipping towards deflation, while yesterday's Eurozone PMI showed German manufacturing returning to growth and even France improving. The news has bolstered the market's spirits, and industrial commodities, even oil, rallied. It was noticeable, though, that the Australian dollar and New Zealand dollar, normally currencies that are sensitive to growth expectations, failed to gain. The Kiwi may have been weighed down by the announcement of a record trade deficit in September. Now, the yen was the worst performing G10 currency yesterday after the government sold 3-month T-bills at a negative yield, the first negative yield at an auction in Japan. This is due to the Bank of Japan just vacuuming up all the paper in the market. Negative rates make the yen an attractive funding currency while also making it unattractive for investing. However, the currency recovered a bit in Asian trading on news that a New York doctor tested positive for Ebola, the first confirmed case of the deadly disease in the city. My guess is that the markets are reacting out of a lack of information, and once the situation becomes clearer, sentiment should recover. Now, speaking of oil, oil jumped on news that Saudi Arabia's supply to the market fell in September, but subsequent trading, the price has begun to fall back. The question is the kingdom trying to bring supply and demand into balance, or is there some other reason why it's cutting back? In any event, my view is that its small reduction in supply is hardly enough to support prices, and I think this bounce offers a good opportunity for those who've been waiting for a chance to participate in the downtrend in oil. As for today's indicators, the first estimate of UK third quarter GDP is expected to show a slowing in the pace of growth, consistent with the recent weak data out of the UK. If the forecast of a decline in growth is met, it could push cable through the psychological level of 160, the figure. In the US, we get new home sales for September. So far, data show that the housing sector in September has regained its strength after stalling in the summer. But contrary to the consensus forecast, existing home sales, building permits, and housing starts all rose in September, suggesting that the housing market's getting back on track. Now, it remains to be seen whether new home sales will follow the recovery path. The market forecast is for a decline in the pace of sales. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.